I'm Cream Ray, your host at the One Soccer Nation podcast. Today I have the pleasure of interviewing Chad Stender. Chad, thank you so much for taking the time. Can you please introduce yourself to our audience?
Sure. Kareem, happy to be here. I appreciate you having me on your show. I'm the managing partner of 76 Capital. We're an early stage venture capital fund focused all across the sports, media, and entertainment industry. This is our 26th year. My other partner, Wayne Kimmel, started everything in '99, and we've always been backing the top entrepreneurs all across technology. And it's really been the last 8 years, Kareem, that we said there's something globally happening around sports, media, entertainment. It's ripe for disruption around technology, data, analytics, and we've been attacking it ever since.
Amazing. So how and why did you get involved in the space?
Sure. So my background, like yourself, I grew up playing soccer, big supporter of the game, played 3 sports in high school. But I've always been passionate about 2 things. And it's kind of been that way throughout my career. It's sports and it's business and kind of entrepreneurship and innovation. And I started in the sports and entertainment industry. I interned for Disney. So after school, moved down to Florida, spent some time in an amazing organization. I think they do service as well as any organization out there. Came back up to the Northeast and worked for the Flyers, worked for the 76ers. Comcast Spectacor owned both teams back then. Ironically, it seems like they're putting the band back together. But then I left the sports and entertainment industry. I really wanted to pursue the startup ecosystem, figuring out working in and around startups and innovation and what does disruption look like, and had the thought too was I going to build something on my own? And after about 5 years of kind of doing a little bit of everything, I had gotten to know Wayne, again, the founder of 76 Capital, probably about 3 or 4 years prior, and it felt like the right time for us. And so in 2012, I moved over into the venture space. And for me, it was perfect. It was the blend of working with the entrepreneurs, working in and around startups, continuing to build and be involved in the space. But the jump off and kind of the change in direction of where we are today, we stayed around incredible entrepreneurs. We stayed across technology. But again, we said something is happening around sports and entertainment. It's ripe for disruption. There were very few venture players at the time. And that was the moment we went all in. It was right about 2015. So much has happened. We've had a ton of tailwinds. There's been a lot of macro change that's been for the better for us and for the industry. And it's an exciting time. And I think soccer's always been there. From the state side, it's going to be amazing with the Clubs Cup this year and obviously the World Cup next year. And then the Women's Cup the following year, even though, the states aren't hosting, but it's still just this moment in soccer. And it's something we're really excited about at 76 Capital. And obviously, personally, something I'm deeply passionate about.
Amazing. I mean, you mentioned some of the big tournaments that are coming up in America, the 2025 FIFA Club World Cup, 2026 Men's World Cup. There's the Women's World Cup you mentioned, as well as 2028, the LA Olympics in the US, potentially a 2031 Women's FIFA World Cup in the US, potentially, if they win that bid. With saying that, you'd mentioned, prior work experiences before transitioning into the VC space, and in regards of thinking of, should I start a startup or should I transition into the VC space? I don't want to ask a 2 in 1. I'll just keep it simple and ask a 1. Was it hard for you to transition into the VC space, or did you have most of the skills that you needed in order to transition into that space, work experience wise?
Sure. It's kind of a two pieces to it. I think when you look where things are today, the idea of being in and around venture and private equity, it typically when students are studying business, finance, going to grad school, that's probably top 1 or 2 on their list. Can they break into banking, venture, private equity, kind of the overall asset class? When I got in, I'd say it was a little less in vogue. The idea of being an entrepreneur when I was doing it was still a little bit of oh, you're an entrepreneur. What does that mean? You don't have a job? Like it's a little different, but I think Shark Tank had a big play for the space of just kind of the education and the understanding. For me, it wasn't necessarily something coming out of college that was top of mind. Again, it was how can I break into the sports and entertainment space? And I was fortunate enough to make that happen for myself. Um, Understanding venture through the eyes of an entrepreneur was something that I learned and something that I was part of. But I can't say that at that moment it was always my North Star to be a venture capitalist. It candidly happened a little organically. Um, but I also feel like I understood the opportunity at hand and how blessed I was to be an investor and get to work with entrepreneurs. I think that's by far the best part of what we get to do at 76 Capital. And then fast forward when we moved and went all in on sports, it was this perfect culmination of kind of everything I wanted to do and sought out. And for me, it's, I can say it like I'm living a dream, but I can honestly tell you too, like it wasn't something that, I knew from day one I wanted to be. And sometimes things kind of go your way. I feel like you make that luck happen, but I do feel lucky and blessed to have it.
Absolutely. You mentioned you guys went all into sports. What year was that? And what was the deciding factor of like, let's go all into sport?
It was 2015.
Yeah.
Like I said, Wayne started everything in 99, had incredible success through the early years of 76 Capital. But at that time and before I joined the firm, it was a very like generalist approach. It was doing everything from consumer tech, healthcare, fintech, just a little bit of, finding the entrepreneurs was a big part of it, and understanding the technology and being able to underwrite it through experts and being able to, use the network to make that call and to help underwrite the deal and then invest. In our eyes, by kind of 2010 through 2010 and beyond, but it was really around 2010, 2012. If you look back historically, in 2005, Y Combinator came through. In 2010, you had both AngelList and 500 startups that year. And we felt like the early stage space all of a sudden, was oversaturated. Everyone was kind of fighting for deals and in some instances overpaying for the opportunities. And that's never been our MO. Our MO has been figure it out ourselves, think like an entrepreneur. We honestly consider ourselves, Kareem, entrepreneurs as much as we are investors. And when we felt like having a brand that was known for something was the way to go in early stage venture. And being a generalist, we didn't feel like was the path forward for us. And I think we made the right call at the right time. It did take us some time, and we had a bunch of different kind of asset class opportunities, a bunch of different verticals that we were thinking about. But for a couple different reasons, seeing some of the trends across Asia and Europe around gaming and betting and esports, some of the stuff that had really not taken hold in North America, but really like the use of data and analytics, we felt like there was something really special happening. And I can get into it, but from a macro sense, so much went our way that we made the right call at the right time for us. And then a lot has happened since that's been, we've benefited from, but I think we've continued to attack and to push.
Absolutely. Quick story. I'm at the gym listening to Wayne on the 76 Capital podcast on YouTube.
Sure.
With one of the guys. I don't remember the individual's name, but it was a guy that did betting, and he shares a story of growing up in New York, Italian, and at the time betting was illegal at the time, but he was learning through the streets, etc. And now he does it professionally, and it's legal now.
Yep.
So you mentioned betting, so it just sparked that story up, and I know it's random, but just wanted to share it in regards to betting. Just quick question. What's your thought in regards to the esports space, gaming, and betting now?
How does betting affect esports, or kind of two separate categories?
Just what are your thoughts within these, in these digital spaces with like betting, esports, individually or together? Just what are your thoughts now? Because these are new spaces.
Yeah. Around the similar time, around 2015, it was very in vogue to invest in an esports team. There were some really big gaming titles, League of Legends, Overwatch, and everyone kind of wanted a piece. A lot of the traditional team owners were going that route. And that was the year, I think it was 2016, that Overwatch launched. And it was an amazing time. It was incredible to see globally, where some of the better teams were not in the States, but what was happening in and around esports and the idea of video game competition. But what we saw was a lot of these investors were trying to own pieces of teams, or they were purchasing the whole thing, $20 million, $30 million. And for us, the one thing at 76 Capital that we've always gone to is stay across technology and the idea of really investing across platform. And I think the one thing that we saw that we got right was gaming has continued to grow every year exponentially. The stats are like a third of the world identifies as gamers. Hundreds and hundreds of universities now offer scholarships that you can go and play esports as a professional gamer. But still, casually, it's unbelievable this size and scale of the industry. And for us, we felt like, okay, what can we invest in? What are the opportunities that if this industry continues to grow, we'll invest? And so we've thought through platform and access. And that's kind of how we've made our investments across esports and gaming, building the infrastructure. If you and I wanted to go out and play soccer, it's, grab the ball, find a couple of others. We don't even need nets. We can throw down shoes and we're on, right? To have gaming competitions, you can do it online, but it's not always the same based on Wi-Fi, based on the devices. But to do it in true form fashion, you're in person, and that's complicated. So the idea of, where are the ice hockey rinks for gaming? And that's kind of our mindset from an investment standpoint. And then in 2018, May 14, 2018, the law that changed sports betting in America was overturned. So PASPA was repealed. And all of a sudden, outside of Nevada, each individual state could determine whether they wanted to pursue sports betting and iGaming or not. And well, I'm sorry, PASPA was around sports betting, but also iGaming has gotten involved in this conversation. And I think at the time, a lot of people thought, maybe a handful of states will do it across the first 5 years. Maybe it'll be 10 states, maybe it'll be 15 states. And it happened rapidly. And the handle, the amount bet went from just under $10 billion in the first year in Nevada, and then Delaware's the next state. And all of a sudden, fast forward, it's 38 states, 39 now, DC, Puerto Rico, Canada had their version. And over $150 billion was bet in the regulated market last year. And to us, that has been the big undercurrent of what's driving the values of the leagues, the teams, the media rights. It's all kind of blended together. The NFL did a media rights deal north of $110 billion. The NBA just came off of theirs, just under $80 billion. A large part of that is betting and the attention that the fans have when they're betting and their interest involved. And that's the regulated side. It's hard to measure how much is bet still in the gray or illegal markets and in states like California, Texas that haven't regulated yet. So it is really driving a lot of the value. And same thing as esports. Our thought is, how do we invest in and around these industries that are growing exponentially? And for us, specifically on the betting and gaming side, it's been everything from the data, the analytics, the media side of it. And we're also investors on the compliance and integrity, because we understand that it's imperative for the industry to continue to grow, to make sure it's regulated, that everything's on the up and up, and to have those watchdogs. I think the misnomer is a little bit that people feel, when things weren't regulated, that's okay, because kind of like turn your back on it. But in a regulated industry, it brings out the bad players faster, and it forces people to identify what's going wrong and to call it out. And so there's going to be growing pains, but that's an area we've been focused on from an investment area. It's been really powerful for us. One of our leading companies there is called IC360, Integrity Compliance 360. And we'll see. The whole idea of betting in esports, it hasn't really taken. It's not a big play, but things are early yet. These are still early days of this. But what I will say overall is this is the moment. Sports is a true asset class. Everyone is realizing it. It's been kind of across the last 24 to 36 months that people are finally shaking their heads with us at 76 saying, yes, let's invest, let's figure out what's right for us, and let's attack this. And it's been a lot of fun too.
Yeah. What would you say in regards to like, so I'm more so, this is a new space for me. Well, not too new, but esports, betting, tech. I'm more so into like, the hard assets, soccer. Um,
Yep.
so, I've seen or read a few articles in regards to why investors are diversifying their portfolio into sports, and they're looking more into the space now, and more investors are getting into sports. Um, what are the questions that you guys are getting from investors in regards to like investors investing into the space for the first time? What are the questions that most frequently come up?
Sure. I think the biggest thing is an overall education and understanding. Where we see it, when you invest in top entrepreneurs that are disrupting on the latest technology, you can talk about AI, you can talk about augmented reality, mixed reality, blockchain. But when they're doing it in an area that hasn't really been disrupted by entrepreneurs, that to us is this massive opportunity. It's just there's an education piece of, is this large enough? That's like a very common, like how big of an asset class is this? Most recently, it's been pinned at about a $3 trillion asset class, right? And so I think that piece, once they understand how big of an opportunity is, and then you can show them just like any other asset class, right? Like what's happened across banking and finance, healthcare, you name it. Entrepreneurs have come in, used the latest technology and disrupted. And that's that moment. And it catches pretty quickly. Everyone loves talking about it. Everyone does one of three things. They themselves are the athlete playing and working out. They love to watch and be entertained by it. Betting is part of that again, like kind of that overall entertaining piece. And or you're connected to it. You have a kid, you have a grandkid, you have a niece, a nephew. But this whole idea of youth sports, which you know very well, is a massive industry. And so everyone's connected in and around it. They just haven't understood where to invest yet. And so right now you have a handful of us that are investing in kind of your traditional venture, kind of pre-seed seed to series A, B. There's a handful of us right now. We do a lot of deals together. There's a lot of team owners that are doing deals that we work with and know each other. So a lot of athletes have been really successful at this. And then the other side, which you kind of have heard a lot about too, people want to be either the majority team owner, or they want to have an LP stake. They want to be a minority owner of a sports team and franchise. And those are kind of the two ways that we're looking at it. I think fast forward maybe 3 to 5 years, there's a whole middle section, kind of like this desert of investors can move upstream, or these team owners are going to need to invest in the technology that's going to drive the continued value. But seeing a sports team now valued over $10 billion is incredible, the way also some of these teams have been managed and run. But a lot of that is the change in landscape around who the owners are, how they're looking at this business. But there's a lot of growth area to see that a team's worth $10 billion, and some of them have not been run as professional as a $10 billion company in any other industry. It's global. You have fans all over the world. So how do you know who your fans are? How do you sell them? How do you get to know them? That's data. That's the use of AI. It's everything we're investing in. And that's kind of how we parse through the industries. And that's a lot of the conversation we have with current investors and potential.
Understood. I know we're touching on many different points here. I want to switch gears a little bit.
Sure.
76 Capital has had significant exits with companies like, and correct me if I'm pronouncing any company name wrong, but VSiN, Victory, and Team Whistle. I'm not aware if there's other companies that you guys have exited as well. Please do mention. But what were the key factors behind the success of these portfolio companies, and how did 76 Capital contribute to their growth?
Sure. I'll work backwards actually. So our latest exit that wasn't mentioned was a company called C360. They exited to a company named Cosm, which has been in the news a lot recently. Cosm themselves have recently raised $250 million, but they're the entertainment centers, Dallas, LA, they're expanding to Atlanta. I think Detroit and Chicago are next. But it was our company's technology, C360, that allowed for this immersive viewpoint. It's like a 180-degree theater So it's live entertainment of some of the biggest sporting events. But it was C360's technology. And what they're best known for is everyone knows the pylon cams that are used across professional college sports. Well, that's C360's technology that's in that cam, that's in that pylon, that's a different viewpoint that you can see the player literally as they knock it down or they're right over it. And it's that technology that has helped to make Cosm so valuable. So that was a really great exit for us recently. But then we had the two, Kareem, that were in the betting space. And it was VSiN. It was founded by Brent Musburger and his nephew Brian. And it was this idea of, could you cover the sports betting industry 24/7, kind of the CNBC or the ESPN of sports betting, and yet make it entertaining and at the same time have enough data and information that makes your casual bettor to kind of some of your sharper bettors entertained and want to tune in. Live video content, podcasts, satellite radio, and we did it successfully. Really cool opportunity, great team, and that company was sold to DraftKings. And what DraftKings was able to do was kind of tap into the user base, add additional bettors to their network. And then just prior to that DraftKings exit, we sold a company called Victory. And it was the idea of, can you build a next gen platform for sports betting? And Fubo TV, which has been in the news recently, Disney just acquired them. They announced to the street, they're publicly traded, they announced to the street that they were going to get into betting and gaming, and they really needed a platform. And it was kind of perfect combination. Ironically, we had introduced the CEO of Victory to the CEO of Fubo about 6 months prior. They picked up conversation, and we sold that company in 13 months to Fubo TV. So it was a great exit. I was on the board of that company, and it was a good, it was a really good win for us. And then just prior to was actually one of our older companies. We invested in a company in 2013 called Team Whistle, or Whistle Sports at the time. But they were one of the first to really understand the YouTube, the rise of YouTube, the opportunities around everything, and the now today everyone knows Dude Perfect, but at the time, Dude Perfect was one of the first stars on kind of to partner and work with Whistle Sports or Team Whistle. And then there were a bunch of other artists and creators that came on the platform. But that company was acquired by 11 Sports, and then 11 Sports was acquired by DAZN. So we've had a number of exits, a number of very well-known acquisitions by acquirer. I think this year, 2025, 2026 into next, you're going to see, I think you're going to really see things open up from the acquisition and the IPO market. And we have about 25 active portfolio companies and some of the leaders across their industry. So we're super excited.
Amazing. Those are huge deals. I mean, if you're able to mention, what's the biggest exit that you guys had company-wise, and if you're able to mention a number?
Yeah, there was an exit prior to my time when Wayne started 76 Capital. Again, we weren't in the sports space at the time, but it was very early. It was 2001, 2002. Wayne invested in an online food ordering company. And obviously today, that's everyone knows, right? You pick up your phone, everyone orders. But at the time, and Kareem, you're on the younger side, but people were faxing their orders in, right? Everyone was calling up, or you were faxing your order in, which I don't, to some of your audience, that probably sounds crazy. But Seamless Web, if you're in New York, everyone knows Seamless because they were a B2B company. You still see their stickers on a lot of the restaurants today. But that was the largest exit. It was just under 30 times investment for us. It returned the entire fund of capital, the first fund that Wayne had. And it was a massive success. And then Seamless went on and partnered with Grubhub. So Grubhub's public today, but it was really that partnership. Seamless was the B2B side of it. Grubhub was the B2C side of it. They merged, went public, and massive success. And it was great for us because most of those investors, I mean, they were super happy, and then they continued to invest with us. And we've had investors across, the 25, 26 years, which is pretty incredible to say from a venture fund.
Amazing. Could you share a little bit of the criteria in regards to when you guys are making the investment? Is there what's the minimum to maximum check sizes that you guys are writing into a company? Are you guys looking to, because you'd mentioned on one of the companies that you get a board position, are you guys also negotiating for positions also when investing sometimes? And is there a certain is there a minimum percentage or to max percentage that you guys are looking at making these investments?
Sure.
A little bit.
Yeah, we essentially look for three main criteria points, but again, we love to get in early. We'll go in some of the earliest stages of the company and kind of to Series A. That's our sweet spot. The checks we write anywhere from, a couple $100,000 to millions of dollars into these businesses, depending on where they're at. But for us, when we're underwriting a company, first and foremost, more than anything, it's the people. You are investing, you are, literally betting on the founders of these businesses. And it is that skill that, you always talk about 10,000, right? To do something 10,000 times, 10,000 hours. I've been in over 10,000 deal calls. I've looked at over 10,000 opportunities. Wayne, I'm sure, is, north of 25, 30,000. And it's understanding the types of founders that we're looking for. And that's a really critical piece because we work really closely. For us, it's about how much value can we add. Once we invest, we're all in. We're on the side of the table with them. We're doing everything we can, from helping them, strategize, build their company. Our network is their network. Whatever we can do to help, we will. And that's kind of a 24/7 around the clock, but we love it. The other thing is the founders have to be going after a massive go big opportunity. Again, because it's early stage in nature, they're not going to get it right from the start. The business plan is going to change. Things are going to evolve, and they have to be able to move at a really big target. If they try to solve one specific problem and miss, it's harder to kind of move off from that and change their business model. So we go after massive opportunities that can have massive returns for us. Go big or go home type of play. And that third piece of criteria for us that I alluded to, how much value can we add? And if we don't see that, we're not going to put our money in. If we don't see an opportunity that we can add a lot of value and be really strategic to the company, it's not a play for us. Now we're minority control. We do not take more than 50%. Our sweet spot is usually about 5 to 20%, depending on the stage of company and depending on when we get in. So we want to have enough chunky ownership where we can add value and it's going to be meaningful. But again, we're not trying to come in, take control, and tell them what to do. We build together, and that's been our core, and it's worked for us again for 25 plus years.
Many great points, Chad. One of my favorite sayings, oh, not one of my favorite, but I do really like that saying of "go big or go home." And then there's another one actually too that I've heard in the VC spaces. You're not betting on the horse; you're betting on the jockey.
Yes, of course. Definitely. It's about the people. It truly is. And I think one of the biggest factors that we think about and talk about at 76, but can they sell? Can the founders of the business sell? And when you think about their stakeholders, you have to actually be able to sell your own team. You have to convince people that this startup could be the next big one, that maybe you take a salary cut, maybe you're doing more for the upside and the equity, but come over here and take this chance with me. And you're selling the vision, you're selling the culture, you're selling the opportunity. But two, you need to sell outside. I don't care how great the product is or the technology or the widget. You need to get people to open up their wallet, run their credit card, and pay you for what you're doing. And I think there's too many founders that aren't comfortable with that or don't understand that. And then the biggest piece, if you're raising capital, you're probably going to need to raise capital again. You're probably going to need to raise another round at some point. And so you need to sell investors. So, for us, are these founders comfortable and are they skilled and talented to be able to sell? And it's an incredible asset to have as a company, but it's an incredible asset to have across all. I think that's something that should be taught more across school or society wise. It's a really strong core soft skill that's invaluable.
Agreed. Yeah, and it really is a skill. It's something that,
Sure.
as everything else, does take time. I wanted to also just touch on a point that you had mentioned a bit earlier too, in regards to the business plan may change and evolve, and about, you know, thinking big. Recently did an interview with Steve Livingstone, um, founder of Sporting Jacks, um, that they're working on a $1 billion mixed use development project within
Okay.
Florida, Jacksonville. And I had asked him, I said, was the vision for the project to be this big in the beginning? And he had said no. So tying this back to your point in regards to thinking big, and making sure that the project is big enough. And I feel like you had mentioned like a point of a concept for, I think what I was gauging was like looking also for a blue ocean per se,
Mhm.
with the opportunity of investment as well as an exit tied to it.
Yeah, very
So
important. Yeah.
yeah, 100%. So I guess my point of what I was saying to conclude it was just like thinking big is something too, where at least from my experience in life was I had to evolve to that of thinking big. Um, a lot of the entrepreneurs that you guys come across, are they thinking big, or is it something that you guys also install into them? They may have a great vision, but you guys could see something more, and you guys are influencing that and growing that person to think much bigger. I think it's kind of going back to what you're saying about changing the business plan. So I think there is that concept there, right?
Definitely. You know, to us, it's again, it's about the addressable market. We want to go at something, and when I say we, it's with our founders, with our companies we invest in. It's at such scale and such size that they can have exits that are worth billions of dollars. Every deal that we invest in, we underwrite. We want to see at least a 10 times return. We understand the risky nature of the business. They might not all get there, but when they go big, again, they're going to have these massive exits. So you got to be able to, when I say think big, it's go at something that literally, 3, 5, 10 years out could change the way society evolves and adapts and does things, right? The smartphone, right? Search online, payments, different forms. These things have changed the way we interact, changed the way we do commerce. And it's that type of founder that it's really tricky, because it's that type of founder that can think that big, but also understands the blocking and tackling of how do you eventually get there. And they don't just have their heads in the cloud and think, oh, I'm going to build something that's going to be worth billions. I have no idea how I'm going to get there, but I'll just be like, it's that mindset, but the skill set to be able to, how to eat an elephant one bite at a time, right? Like you got to literally set these little goals that will get you to this massive win. A lot of victories, a lot of little wins add up to a really big victory. And it's that kind of founder, and they're rare. That's why we see so many deals. We see about 200 opportunities every month. And it's to kind of find that needle in the haystack. For us, a lot of early stage investors, they kind of, literally throw things at the wall. They know they might get it right if they just do enough deals and hope. And for us, it's just absolutely targeted. We'd rather do fewer deals and find the ones that, again, we're going to work closely with and build with. And it's been a model of success for us at 76 Capital, something that's repeatable and something we're going to continue to do. But it's hard and it's tiring. And honestly, you hate saying no, because I've been on the other side of the table. I've been part of the founding team, and no one likes hearing no. No one likes saying no, but it's part of the business. And, I think, this is a soccer podcast. This is a sports podcast. And athletes do so well in business because they can take that word no, they can take and turn it into a positive. And that's so important in business. It's not taking it personally, and it's being able to take the adversity and make something great from it. And when we find those entrepreneurs and founders, we know we have the right teams that we've backed, and it's an amazing experience and process from there.
Amazing. Chad, I want to get a little bit behind the scenes with a venture capitalist. What does your day-to-day look like? You mentioned doing, looking at 10,000 deals. You guys are getting 200 deals a month. What does a day-to-day look like?
Yeah, it's a blast. It's also very stressful, and no two days are the same. Really, no 2 hours are the same. but you're constantly doing a couple of things. We have our existing investments, so we're always thinking about how can we help, how can we drive value, how can we take care of our existing investments, and then on the other side, we're always looking for the next opportunity. So we're always searching and we're always, taking calls and listening and looking at emails of you guys should look at this company, or have you talked to this founder, or what about this trend? So you have to have your eyes and ears open. And so that's kind of constant. That's always in motion. And then like the entrepreneur, we're fundraising ourselves. Right now we're into our third fund in the sports strategy. We had our initial close. We made our first couple of investments, but we're also fundraising and bringing in capital that goes alongside our capital as the partners. And so then there's everything in between. And Kareem, it's just there's a little bit of everything sprinkled into each day. And I think what we do pretty well, and what we do really well, is kind of manage and juggle and balance. And we have Wayne and I have an unbelievable team with us that we work, hand in hand, and we're able to tackle a lot. A lot of people kind of think our team is bigger than it actually is. And we kind of, punch above our weight class, as the saying goes. But it's a lot of fun, and there's a lot of stress with it. And you just kind of try to stay in the middle. You try not to get too high or too low based on what happens, because the next hour could change. You could be super high and you could get a call that kind of pulls you back down, or the opposite. And so, having done this since 2012 from the investment side, it's just kind of, let's stay in the middle and see if we can maintain that even keel.
13 years, a decade is a long time.
It's a long time. It's a long time in anything.
Yeah. How does it feel for you now? I mean, are you just in flow in regards to just work-life balance? I mean, after 13 years, you got it down pat.
Yes, yes and no. I mean, when I started, I didn't have the gray hair that I do. But I don't think you ever really get comfortable, because I think the moment you feel comfortable, to me, you're falling behind. Like our entrepreneurs and like our companies, you're always trying to push and to do what's next and to go bigger. And so we're always, like, our mentality at 76 is figure out what's next, be on the attack, and kind of think through how can we continue to grow and build and be a leader. And for us, it was that big seismic change to say sports is this next area to go into. And when we did that in 2015, a lot of people looked at us like, I don't know, or are you sure? Or honestly, you guys are stupid. Like, it was that blunt of, what are you guys doing? That's not an area to go invest in. And, we really believe, we had the strength and courage to just not listen and to go and do what we believed in. And it's really paid off for us. But it's kind of always that mentality. But I don't think it's gotten kind of day in, day out. It definitely hasn't been that way.
You had mentioned athletes that do transition into entrepreneurship are great entrepreneurs because they're able to take no, and they have the stamina and duration to keep going. You guys have something called the Athlete Ventures Group, which is an innovative concept. How do you bridge the gap between athletes and tech entrepreneurs? And what unique value do athletes bring to the startup ecosystem?
Yeah, first off, I'd say, Kareem, when we invest in sports, just like any other industry, when you're in the bio or the pharma space, you need to have the doctors and the scientists at the table with you. You need to have the experts side by side with you. And we said, when we're in the sports space, we need to be able to access team owners, anyone across the leagues and the different sports teams. And then we need the athletes, because they are the true professionals. They have done things that none of us have, that none of us experienced. You've been in those locker rooms yourself. You understand that level of expertise and how it takes. And literally, it's not the 1%, but it's the 0.001% that get to these levels. And the crazy thing is, there's so much correlation between an amazing entrepreneur and an amazing athlete. It's the mentality, it's the drive, it's the stick-to-itiveness. It's, again, getting knocked up and getting back up, putting in the work and working smarter and working harder is what makes an athlete amazing, but it also makes an entrepreneur unbelievable, because it's kind of very similar odds of what makes an unbelievable company to what makes an athlete top of their class. because, you know, every athlete going into college, they were the best in their high school. And every athlete that goes pro, they were the best in their college. And all of a sudden, right, what does it take to actually become the best of the best of the best? And that is truly hard. And that skill set can make an unbelievable entrepreneur athlete. I think what's tricky and what we've seen firsthand is athletes very rarely fail. Athletes very rarely haven't been successful. They might not win a championship every year, but again, they've been the best in class along the way. And when you're investing, and this is really the part that we've worked so closely with our athletes on, you can't always, sometimes you do unfortunately have to walk away from a company or an opportunity. And sometimes they're just, for a plethora of reasons, they're not going to be the ones that win. They're not going to, it's not the right time, competition, so on. And that's the tricky thing of working with an athlete and saying, like, we're going to stop investing, or this isn't the one to focus on. And I think that lesson has been really valuable from our partnerships with our athletes. But I think that's something that, you know, understandably is really hard for them to say, like, you know, we're not going to be winners this time. And you don't want to keep putting good money at bad, like very common saying, but you don't want to keep putting good money at bad. And it doesn't mean we're going to get it right either, but it's, you know, getting off the bad ones and going and spending more time with the good ones or finding the next is, but we've had athletes that have kind of interned with us, shadowed with us, worked with some of our portfolio companies, all the way to kind of being investors and partners with us and really wanting to be as involved as possible. But when they're in the meetings with the founders, it's unbelievable what happens between the teams and the athletes, and they start to realize, right? Because some of the athletes, if they've been playing their career, they probably haven't been in a boardroom, maybe up until that moment. So they're a little nervous. They're not sure what to expect. And the entrepreneurs, maybe they haven't been around a big time professional athlete before. But once they understand the common ground, it's magical. And there's so much greatness that can come from it. And so we've been really lucky and blessed to work with great athletes and great entrepreneurs and bring it all together.
Absolutely. When you mention this scenario, it brings a sparkle to my eye because it's such a cool place where you guys are at in regards to working with top class athletes that are the best of the best, making millions of dollars and looking to continue to grow their legacy, their wealth, and entrust in you guys with assisting with that. And then you got the entrepreneurs that you guys are vetting and are choosing and believing into, investing into. These are very sometimes sophisticated individuals on the athlete side. How many relationships do you guys have with athletes, and you know, in regards to you know, continuing to expand within that network? How do you guys continue to do so?
Yeah. The way we've approached it, and kind of it's been our mentality, is kind of one by one, hand to hand. And so it's, for us, it's never been, you know, we want to work with 50 athletes or we want to work with 150 athletes. We want to work, this is across everything. We want to work with amazing people that are really smart, really talented, really hardworking, and want to do good and build. And that goes for the athletes, that goes for the entrepreneurs, that goes with our investors and our team. And when you kind of find that right combination, it's unbelievable. One thing that's been really powerful for us, in 2016, we partnered with Rubicon Talent. And Rubicon Talent is a leading sports marketing agency. They do all the work outside of the contract, right? So all the brand deals, all the off the court, off the field, all the appearances, all the sponsorship work. And they're entrepreneurs themselves. It was started by 4 partners, and they left the bigger agencies to start their own agency, to build something that they wanted to do. And that's been incredible, from relationships for us, but also we came together with the idea that athletes need help. Athletes need help understanding business, these one-off deals, these one-off opportunities that are brought to them. And Rubicon Talent wanted that help with their athletes. You know, they kind of felt like their circle, it was their, you know, lawyers and financial advisors and their agents, and then everyone else in their circle. But no one really understood these venture and one-off opportunities the way we did. And it was a symbiotic relationship back in 2016. But that's been really great from kind of bringing us in and around the athletes as well, and seeing what Rubicon Talent has done. They have an amazing portfolio of athletes, of Olympians. They have broadcasters and chefs and some of the best in class. And it's been a great relationship for almost 10 years now.
So, Chad, what are some of the biggest challenges that you guys have faced in the sports-focused venture capital space, and how have you and your team overcome them?
Sure. I think, Kareem, you know, when we started moving our focus of investing, again, staying early and staying across tech, but saying sports is this next big asset class, this next big macro opportunity to invest in. We were early, and you know, a couple things can happen. You can be early and right, and I feel like that's kind of that area that we've moved into. We were early, but we've been right on a lot. Or you can be early adopters and be wrong, or be early and too early. And it really moved. But again, we heard a lot of no, or we heard a lot of we don't believe this, or we heard a lot of I don't get it, or I don't see the opportunity. And so look, you know, you can kind of follow the pack and go with the crowd. And it's harder to break out that way. It's harder to be leader of the pack, or you can go against the grain a little and do it with thought and do it with strategy. And when it pays off, now the herd will start coming your way. And I feel like that's where we're at. And for us, the challenge now is, okay, great. How do you stay ahead? How do you keep pushing? And, you know, it's kind of tenfold the number of investors that we've seen across the last 8 years. But, you know, there were not institutional banks. It was not Goldman and JP and Citi that had its own sports investment arm and practice. And now you see it. And now you see big private equity dollars, again, going into these teams and leagues and media rights deals. And so, you know, again, we're entrepreneurs. We think like an entrepreneur. We want to build, we want to grow. And so you've got to be strong, and you got to believe in what you're doing, and you got to make it happen. And it doesn't always go exactly like you thought it would, just like our entrepreneurs, but you've got to be able to keep evolving. And I think we've done that really well to date.
Thanks. That's a really good point in regards to sometimes you could be way too early. You mentioned great points there, or being early but right, or being early and wrong. Yeah, those are good points, because I've heard stories of guys that have been too early in certain spaces and it wasn't successful for them. So it's always good. It always feels good when you're right. It's definitely a good feeling.
Sure.
So what major trends are you guys seeing in the future of sports industry, particularly in areas like esports, sports betting, and immersive media? How is 76 Capital positioning itself to capitalize on these trends?
Sure. We're always thinking tech first. We're always following what is the latest technology, and then asking that question of how it's going to disrupt what we're investing in. And so when technology brings you all the way to the edge, right? Large data sets, AI, the idea of kind of this blended worlds, this Web3 of the mixed reality, the augmented reality. What is that going to do for us, you know, today, but what's it going to do for us 5 years out? And then where we're investing in, how is that going to change the sports and entertainment landscape? So those are really big things. But I think when you kind of pull it back and look at some of the companies we've invested in, when you talk about data, we have a company called Ludus Analytics, right? They're making the idea of being a data scientist, an engineer, that challenge of it, making it more simplistic, making it tangible, so you don't have to be that data scientist. But what does that do? Why is that valuable? Sports teams, again, they have millions and millions of fans globally. And you need to understand, you need to be able to use data to help you become more valuable as a team and as a league. And that's kind of what one of our investments, like Ludus Analytics, is doing. Again, we have companies across the betting and gaming space. We have a massive company called Swish Analytics. And essentially, if you're doing anything in-game, prop bets, you know, multi-game, single game parlay, it's Swish that's kind of making those lines and helping the sports books set the lines. And again, it's the use of data analytics. Some of the best engineers left some of your big tech players to go over to Swish. because one, it's fun and it's entertaining. But it's always, people are always amazed. They'll watch a game, and the sports books got it within 1 point or half a point. And people are like, how do they do that? How do they do it? How do they get it right so frequently? And when you look back historically, some of your line creators were just like brilliant minds. They were probably doing it a lot just intuitively, and they knew how to set the lines. They've been doing it for so long. But now that we can use data and we can use analytics, we're getting smarter and better and faster. And again, it's just, how is that evolving for us? And that's how we think through investing. But as the fan, what is that experience like? What is going to change the way we view a game or a concert or any type of live programming? Because we all know live sports is the last bastion, right? It is always, 80 to 90% of the top 100 programs are always sports related every single year. And so people want to look differently, see things differently, experience differently. Not all of us, most of us cannot afford to sit front row. But how do you experience that? Some people actually enjoy being at home and watching a game from their living room, right? But how can that change the way you're watching the game, or bring in your fantasy to that, or your betting, or being able to search in real time, where's that quarterback from, right? Or did that wide receiver, I think he played also with like, and being able to do that in real time and kind of being fully immersed and engaged. And right now it's kind of this weird experience of, you have your phone and maybe your laptop and a big screen, and it's like 3 or 4 screens going on. And will technology make that experience bigger and better? And we believe it can. And that's, why we invested in Quintar. And I can go on and on with our companies, but that's how we think through next gen technology, and what we're investing in.
Do you think there's a point where there's too much tech in sport?
No, I think you can say that about any industry. That, are you kind of over teching something, if that's even a saying, right? But like, I would say no. I think things get oversaturated, right? There's too much capital trying to invest in something, or there's too many entrepreneurs trying to disrupt something. But you get to different levels, because you're not solving for one thing. You have, age ranges from 0 to 100. You have tech understanding from novice to expert. And so you're trying to solve for the masses. I think we all, whether you're a fan of Apple or not, I think a lot of people would agree they've done it really well, of building something that's simplistic, yet you can be an expert at it. And it's it's really hard to do what they've done. And I think when you find good entrepreneurs and good innovators through technology, it's kind of that experience that can be delivered. And that's the types of companies that we're investing in and looking for.
Understood. Last question.
Sure.
Looking ahead, what is the vision for 76 Capital over the next 5 to 10 years? Are there any specific industries or technologies you guys are particularly excited about exploring?
We continue, I think, first and foremost, Kareem, to push and ask ourselves, what else can we do? Where else can we go? I think it's 2 things. I think it's thinking globally. And again, we've been known as the kind of early stage investors, again, pre-seed to A, but we want to be known as the platform, as the sports platform that invests, maybe startup to public, or whatever that looks like in between. And so, for us, it's just, what else can we do? How can we strategically grow? But it's a super exciting time. There's more and more opportunity. We didn't even really touch on, I think, the most powerful thing that's happening, and that's across the women's sports league, and what's happening across the NWSL and the WNBA and college sports, and the new rise of kind of professional volleyball and all these professional ice hockey across the women, and just an unbelievable interest and excitement. And having a daughter, and I'm kind of like really pissed, and I think Philly's gonna get there, and we'll have a professional women's basketball team and soccer team hopefully in the next couple of years. But it's an unbelievable time. There's so much to go do, and we want to be smack middle of the center of it, both as investors, advisors, and being in and around of being around, yes, an exciting industry, but one that will be transformative to us at 76 and all that are involved.
Yeah, it's something, I'm new into the soccer investment space. We got into it 2022, and it was a year later, 2023, where I started to hear more on the women's side. And just yesterday I was listening to Sporting's Jack's announcement in regards to them being in the USL Super League, and just listening to the mayor speak on it, Amanda Van Veld from USL Super League, just the positive effect, the new opportunity for women within sport, specifically speaking in soccer. I mean, I guess across sport, whether it's on the field or off the field within the front office, is that, there's opportunity finally being created for women in sport, which is so exciting and new for fans, and fans are getting behind it. And as you mentioned, I could feel I can understand how you feel in regards to wanting there to be that opportunity where you are. And it's something that, we're working on our side behind the scenes and getting involved in to also be a part of that opportunity. And, men's is there continuing to grow men's, but as well as contributing to the women's side, which again, we're super excited about too. And I think it's just very nice to see and hear that these things are changing and are actually happening. So yeah, just wanted to touch on that. And
definitely,
yeah.
I mean, it's just an unbelievable moment, and there's still so much more that has to happen, that has to come through. But seeing the launch of Unrivaled, the new women's 3v3 league that started last week, like, it's just a super cool and exciting time. Dawn Staley getting the largest contract ever across female basketball. Like, these moments are watershed. They happen, they take too long. It should have happened earlier, but we're here. And, at 76, like, we're just super excited because, it's that area we play in and we're involved in, and there's just, again, so much more to go do. And we're excited to be in and around all of it.
Awesome. Well, Chad, this was fun for me. This is sports, tech sports. I mean, sports is not new, but tech is a bit new to me per se. But this was fun. Learning more and to have a chat with you was great. And I really appreciate you taking the time for being on the One Soccer Nation podcast.
No, same. Thank you for having me. It's been a lot of fun. Thank you.